Obviously, as a market, a lot has happened in our economy. If you look at growth, overall growth is, I would say, stronger compared to other countries in the region. If you're looking at GDP as a basis, as an indicator, we're growing 5% plus, which we are going to the high single digits. You know, Africa, sub-Saharan Africa is going into shy of 3% if you look at growth. But our challenges still remain. You know, savings still remains a bigger concern for most sub-Saharan African countries. I mean, Kenya, if you look at our saving rate, depending on the numbers you look at, if you look at the central bank data, we're on about 10-11% of GDP. If you look at the investment rate in the economy, it's around about 17-18%. And ultimately, we have to seed and access capital from different kind of partners to continue to rein growth in terms of the investment that you make. And that gap, saving gap, will always remain a bigger challenges for us even as the economy grows. And the reason why banks then provide a big role to intermediate and provide credit to a lot of providers and businesses. And that's an area we like to see conversations happening today and tomorrow. Because for us, a lot of debates, there's a lot of views, and generally views which have no basis in terms of analytics. I always say that we make a lot of general opinions, but we rarely look at conceptual data that gives you a basis to make discussions. And Africa, we're losing these conversations where the street man decides what is going to happen, and we lose the data to be able to drive a global market. And here I'm talking about the role of fintechs, technology, creating algorithms that will be able to drive our businesses, and especially how we lend to sectors which have been seen traditionally as being very high-risk sectors. So the micro enterprises, agriculture, for instance, small enterprises, and we have to kind of deconstruct the views. You know, for too long, and speaking to policy, you know, policy analysts, government agencies, sometimes we see those sectors as needing subsidies. And you know, Jared and I have spoken about this in the past. So to lend to a farmer, you need a subsidized fertilizer, a subsidized loan from a bank, subsidized water access, subsidized road access. A lot of this, in the long run, wouldn't succeed. So we have to think about the different model of providing credit access to areas where perhaps penetration has been very low, away from the traditional 30, 50-year history where we are looking for some kind of stimulus for those industry sectors. And I can give you some data which we don't speak very much, which is why I stood today. If you look at the role of fintechs and the role of banks to invest, so today a lot of banks, and I'm very excited obviously from where I sit, that we see a lot of investment in technology. Now, when you read the newspapers, they always say that banks are lagging behind, correct, in terms of lending on the mobile, using their own data that is available and insight to lend to customers. And lending to the industry today is, if I summarize the numbers, around about 3 trillion shillings, if I just round this up. But lending to micro enterprises and individuals on the mobile platforms is around about, cumulatively, the last 2 years, is almost 300 billion. It's almost 10%. And that's driven by banks and providers, largely by institutions seated here in this room. And you don't hear that conversations, how they're using the data they have, how you profiling that information. So whereas banks may not necessarily be contrarian fintechs, they are already providing inputs. And you know what, and using that as a platform to be able to enhance not just lending, but also making payments from what we see in the market. And if we want to hear about that more, Agnes, who sits here, runs our payments platform from the industry. And it's a conversation that we can have around the integration. And so for us, we're still not excited about the lending to some sectors. So agriculture remains a slow part. Small and enterprises remain a small part. And so I'm excited to listen to some of the papers that I saw being presented today and tomorrow on what we can do using new insights, new informations and data to be able to profile the decisioning processes for us and making policy interventions for the future of our markets. And that for me is exciting to see. So this information should then get itself, Governor, for us to talk together collectively. And that's what we haven't done before. You know, use the basis of these informations to lift it into our discussion document, collect it with the regulator and see what can we do for our nations going forward. And so I want to thank and salute the scholars and researchers who have taken their time. This is becoming the conference. I mean, I've looked at how many conferences we do that speak about research, and I haven't seen a lot. And this is one that I would say I'm very proud about, and thank all the partners for KBA who help us ourselves to be able to progress. And so let's use the information that we get today, you know, for the KBA with the central bank and see where we can progress